Hey, Dan Passarelli here. Well, the S&P 500 was down just under 1% today, basically flat on the day. SPY closing at 632, spot 25. Now, it looked like we were going to be up today because, well, earlier we were up today, but we got a little bit of a pullback as the market processed some new information, particularly Fed Governor Bostic's chatter and just thinking about some of the stuff that's been going on. Now, one of the things that's been going on is, of course, one of the Fed governors, Adriana Kugler, just sort of up and left, decided to call it a quits. What was that, 2 days ago? And there was some chatter that Trump will replace her, at least maybe temporarily, with a guy by the name of Moran, who has been pretty critical about the Fed lately. Go figure, would you? Isn't that surprising that Trump would want to nominate somebody like that? So, yeah, we don't know if for sure he will nominate him, but that's the White House said that he was probably going to, but it's not official yet. And one of the things that obviously Trump has been critical about is that the Fed has needed to cut rates sooner, is what he has asserted. And boy, we're probably going to get that, because not necessarily even anything to do with Moran, but this morning we had the Thursday initial and continuing jobless claims, and both of them came out with more jobless claims than expected, which is a sign of worsening employment situation / economy. And we were already at about a 99% chance of a 25 basis point cut at the next Fed meeting, which is just about 5 weeks away. So we're very likely to get that. And what happens if we get that? Could that be inflationary? Well, it's hard to say at this point, isn't it? That element, it's hard to say, because with the economy being a little weak, again, we talked about this in the past, that was intentional. The Fed fights inflation by cooling the economy a bit, because it's been hot for, like 6 years or something like that, 5 years, something like that. Now probably about 3 or 4, I guess, after the pandemic. So the objective there is to keep the economy on track so that it doesn't affect the Fed's employment mandate. We want to keep full, close to full employment. But inflation is already a smidge high. Now, the other thing here to take into account is the tariffs that have gone into effect. Now, next week we get CPI and PPI. That's not going to account for any tariff stuff. That's just going to be the July numbers, and the tariffs didn't come into effect till after that. So we're not really going to see if and by how much tariffs affect inflation. But if inflation ends up becoming a thing, here's the real question, is what do you do about it? Well, there's a couple of things. One, gold and silver, natural hedges for inflation. Another thing, real estate, as opposed to stocks. Now, everybody can't just go out and buy a few houses. So what can we trade here from our trading station? Commodities is a very good hedge for inflation. Things like grains, meats, lumber, maybe copper. Copper's been pretty volatile lately. So those are some things that we might want to take a look at, but we'll have to see what happens with the CPI, PPI numbers. And then we really have to wait until next month to see if tariffs really come into effect in harming inflation. Hope that helps. This is Dan Passarelli, Trade Smart.